Right now, millions of Americans over 65 are leaving real money on the table, and most of them have no idea. Here's what's actually happening as of May 2026. Washington is buzzing with talk of a $2,000 dividend check. And yes, it's real talk. President Trump himself told reporters, "We're going to issue a dividend to our middle and lower income people, about $2,000. with funds potentially coming from tariff revenues." No, it has not been signed into law yet, but no new federal stimulus checks are approved for 2026, and any new payment would require congressional approval, so you need to know exactly where this stands before you get misled. On top of that, the IRS just confirmed that if you're 65 or older, you may now claim an additional $6,000 deduction under a new provision, $12,000 if you and your spouse both qualify, effective through 2028. And here's the one that shocks most people. States across the country are rolling out expanded property tax relief programs in 2026, some cutting bills by hundreds, even thousands of dollars. Yet most eligible seniors never apply because they simply don't know these programs exist. New Jersey's new Stay NJ program alone can return up to $6,500. Pennsylvania permanently raised its rebate maximum to $1,000. Stay with me because in this video, I'm breaking down every single one of these updates with the facts, the dates, and exactly what you need to do right now. So let's start right where it matters most, the $2,000 check, because I know that is the number you came here for, and I am going to be completely straight with you. President Trump has publicly floated the idea of what he calls a tariff dividend check, a $2,000 payment that would go directly to middle-income and lower-income Americans, funded by the billions of dollars the federal government has been collecting in tariff revenue. He has said it out loud. He said it to reporters in the Oval Office. He posted about it on Truth Social, and Treasury Secretary Scott Bessent confirmed that the intent would be to target Americans earning under $100,000 a year. Now here is the part that every other channel skips over, and this is exactly why you are watching this video. As of late April 2026, no law has been passed authorizing these $2,000 tariff dividend checks. Congress has not voted on it. The Treasury has not built the infrastructure to send them out. There is no scheduled mailing date. So if you have seen headlines or videos telling you that a check is already in the mail or that it is confirmed for May 3rd, that is simply not accurate. And those people are playing with your trust to get clicks. I refuse to do that to you. But here is why this still matters enormously and why you should stay locked in. The funds for this proposal would come from tariff revenues, not from the federal budget, and there has been no indication that seniors on Social Security would be excluded. Using the COVID-era payments as a reference point, those checks went to individuals earning up to $75,000 and joint filers up to $150,000. If a similar structure were used for a tariff dividend, the overwhelming majority of seniors on fixed Social Security incomes would qualify automatically. A registered Social Security analyst confirmed that if a payment like this were ever authorized based on how past stimulus programs were structured, it would not count as taxable income for Social Security recipients. That is huge because it means it would not push your income up. It would not affect your Medicare premiums, and it would not trigger higher taxes on your existing Social Security benefits. So the proposal itself is actually well designed for seniors. The politics just have not caught up yet. Keep watching Washington and keep watching this channel because the moment anything moves in Congress, you will hear it here first. Now let's talk about something that is not a proposal, something that is already law, already signed, and already in effect right now. And I am genuinely shocked by how many seniors have not heard about this yet. The IRS officially confirmed that if you are 65 or older, you may now claim an additional $6,000 deduction on your federal taxes, completely separate from your standard deduction, valid for tax years 2025 through 2028. If you are married and both you and your spouse qualify, that number doubles to $12,000. This is a provision of what is called the One Big Beautiful Bill, and it phases out for individuals earning above $75,000 in modified adjusted gross income, or $150,000 for joint filers. Now let me explain why this is so important in plain language. Your standard deduction as a senior already exists and is already higher than what younger filers get. This is on top of that. This is an extra $6,000 shield sitting between your income and the IRS. And if you or your tax preparer does not claim it, you simply lose it. You do not get it automatically. You have to file for it. So if you have not already filed your taxes for 2025, or if you are planning ahead for this year, make absolutely sure that your tax preparer or your software knows you are 65 or older and that you are claiming this new enhanced deduction. Print this out and bring it to your accountant if you have to. And there is more on the tax front that connects directly to Social Security. If you spent any part of your working life as a teacher, a firefighter, a police officer, a postal worker, or in any kind of public service job where your employer did not withhold Social Security taxes from your paycheck, you need to listen to this very carefully. The Social Security Fairness Act was signed into law on January 5, 2025, and it eliminated two provisions known as the Windfall Elimination Provision and the Government Pension Offset, rules that had quietly been cutting or completely wiping out the Social Security benefits of public workers for decades. These were nicknamed the Evil Twins by retirement experts, and they penalize people who dedicated their lives to public service. Teachers in states like California, Texas, and Ohio, firefighters, federal workers under the civil service retirement system, millions of people who worked hard, paid into the system in their private sector jobs, and then watched their earned Social Security benefits get slashed just because they also had a government pension. That is over now. As of mid-2025, the Social Security Administration completed sending over 3.1 million payments totaling $17 billion to eligible beneficiaries, 5 months ahead of schedule. Affected individuals received both an increase in their monthly benefit going forward and a retroactive lump sum payment covering benefits owed all the way back to January 2024. Now here's the part that concerns me, and it should concern you too. Even a year after the Social Security Fairness Act was signed, some retirees are still waiting for their full benefits. Some surviving spouses were told their retroactive payments only go back 6 months from when they applied, rather than back to January 2024 as the law intends. If you are a surviving spouse of a public worker, or if you were previously affected by WEP or GPO, and you have not yet seen a change in your monthly benefit, do not sit and wait. Log into your My Social Security account at ssa.gov right now and compare what you are receiving today against what you were receiving before early 2025. If those numbers have not moved, call the Social Security Administration directly. There are senators actively pressuring the SSA to make sure every eligible person gets their full retroactive amount, and you deserve every dollar that the law says is yours. Let's move on now to the property tax relief situation, because this is the area where the most real, immediate money is sitting on the table for seniors right now, and most people never go pick it up. States across the country are rolling out or expanding property tax relief programs specifically for seniors in 2026, with some programs cutting bills by hundreds or even thousands of dollars. And yet, most eligible homeowners do not realize these benefits exist, or they assume they will not qualify. That assumption is costing people serious money, and I want to change that today. Here is how these programs generally work. There are 4 main types of relief. The first is a straight exemption, where a portion of your home's assessed value is simply removed before your tax rate is applied. The second is a freeze, where your property's taxable value gets locked in permanently, so that even if real estate prices go through the roof in your neighborhood, your tax bill stays flat. The third is a deferral, where you postpone paying your taxes until you sell the home. A real lifesaver for seniors who are house rich but cash poor. And the fourth is a rebate or credit, where the state actually sends you money back after you have already paid. Let me give you some real numbers from specific states so you understand what we are actually talking about here. In New Jersey, the brand new Stay NJ program provides a credit of 50% of property taxes paid capped at $6,500 for households earning up to $500,000 annually. That is not a typo. Half your property tax bill back in your pocket. Pennsylvania has been running a rebate program for years, and they just made it permanent and bigger. The 2026 rebate amounts range from $380 to $1,000 depending on income, and the state deadline to apply is June 30th, 2026, with rebates beginning in early July. If you live in Pennsylvania and you have not applied yet, you still have time, but you need to move on that right now. In Texas, seniors can now claim an additional $60,000 exemption on top of existing benefits. And the state also maintains a school tax freeze that kicks in the year you turn 65, permanently capping that portion of your bill no matter how much property values rise. In New York, the Enhanced STAR program for seniors earning below $98,700 provides a $70,700 reduction in school-assessed value, saving the average qualifying senior between $1,500 and $3,500 per year. Florida seniors with lower incomes can qualify for additional homestead exemptions, and in Arizona, the Senior Value Protection Program freezes your assessed value for 3 years at a time, protecting you from rising market values as long as you meet the age and income requirements. The critical thing to understand is that almost none of these programs are automatic. These programs are rarely automatic, and you must actively apply for them, often during a short window at the start of the year. If you miss the deadline, you are stuck paying the full amount for another 12 months. And here is something that catches people off guard every single year. In many states, income-based exemptions do not renew by themselves. You have to re-verify your eligibility. If you moved, if the deed changed, if a spouse passed away, if your home went into a trust, any of those things can require you to refile from scratch. Call your county assessor's office, not next month, this week. Ask them specifically what senior programs are available in your county, whether you are currently enrolled, and what the deadline is to apply or renew for 2026. That one phone call could save you thousands of dollars this year. Now, let's talk about your actual Social Security check and what has changed in 2026 that affects the amount hitting your bank account each month. The 2026 COLA increase came in at 2.8%, and the Social Security Administration estimates the average retiree is now receiving about $56 more per month, bringing the average monthly retirement benefit to roughly $2,071. For married couples both receiving benefits, the average combined increase is about $88 per month, raising average household monthly benefits to around $3,208. Now, 2.8% sounds decent on paper, but I want to be real with you. In a survey conducted by AARP, 77% of older adults said that even a 3% COLA would not be enough to help them keep up with rising prices. And they are right, because at the same time your benefit went up, there was a hit on the other side. The standard monthly Medicare Part B premium climbed from $185 to $290, a nearly 10% increase. And for most Medicare recipients, that premium comes straight out of their Social Security check automatically. So the raise you got with one hand got partially taken back with the other. That is the reality of 2026 for millions of seniors, and it is why every single dollar of relief available to you matters. Here is one more thing I want to make sure you know before we close this section out. There is a new piece of legislation working its way through Congress right now called the Senior Citizens Freedom to Work Act. This bipartisan bill, proposed by Senator Rick Scott of Florida and Representative Greg Murphy of North Carolina, would repeal the retirement earnings test, a provision that currently reduces Social Security benefits for people who claim before full retirement age and continue to work. Right now, if you are collecting Social Security before your full retirement age and you earn more than $24,180 a year from work, you lose $1 in benefits for every $2 you earn above that limit. The retirement earnings test has been described as a relic of the Great Depression, created back in 1935 when the goal was to push older workers out of jobs to free up employment for younger people. That logic does not belong in 2026. If this bill passes, working seniors would be able to keep every dollar of both their paycheck and their Social Security benefits simultaneously. It has not passed yet, but it has real support from both parties and is worth tracking closely. And finally, a quick but important scheduling note for this month specifically. Due to how the May 2026 calendar is structured, most Social Security recipients will see their payments arrive slightly later than usual this month. SSI recipients received their payment on May 1st. For regular Social Security recipients, payments are still coming on the 2nd, 3rd, and 4th Wednesdays of May based on your birth date. There are no changes to benefit amounts or eligibility, just the calendar timing shifting things slightly. So if your payment has not arrived yet and you are expecting it, do not panic. Check your birth date against the Wednesday payment schedule and you will know exactly which Wednesday is yours. The bottom line here is this: 2026 is genuinely one of the most active years for senior financial policy in recent memory. There are real benefits already in law right now that you may be missing. There are proposals moving through Washington that could mean real money in your pocket later this year. And there are deadlines on property tax programs that are closing fast. Stay informed, stay engaged, and do not let anyone convince you that none of this applies to you, because it almost certainly does.